what's up, everyone? It's your boy Looney back with another market breakdown. Today is March 11th, and we just saw a very slight pullback from my account, and I might believe it is somewhat of a overreaction, but this is just the beginning of a bigger dip is really the question. Either way, I'm trying my best to stay profitable in any direction. I'm going to break down my top 3 trading strategies that help me make money in any sort of situation. Before we dive in, quick shout out to my community. It's free to join, but if you want real-time trade alerts, strategy breakdowns, and exclusive plays, there's also a premium option. All links are in the description. It's a Discord, but now let's get into it. Number 1 is I am selling puts, cash secured puts. This is one of my favorite ways to generate income while buying stocks at a discount. I'm currently selling cash secured puts on, I have Riot and I have a lot of SoFi puts, and mostly these two. Oh, and NEO, that's the last one that I'm doing right now. And if the stock happens to drop below my strike price, I will be getting assigned shares at a discounted price, which I'm okay with because I actually want to own these shares. I believe SoFi at under $15 is a great buy. I know that might seem a little overestimated, but as of now, I'm okay with owning SoFi before $15, and then hopefully I could sell it off on the $20 mark or the $30 mark, which I don't see in the short term, but in the long term, I do see it reaching those goals. So like I said, I sold this $13 put and I collected premium. My premium was $54. So no matter what, I'm getting paid $54 and my break even is $12.46. So I will only be losing money if SoFi is below that $12 mark, which it is already, but at the same time, long-term aspect. And I believe it's a win-win strategy. I get it for a cheaper price than what it was. So if I was trading way above that $13 at some point, almost at $20 at the beginning of the year, and I could see it bounce back up there. I don't know how quickly, but I do feel the market and SoFi with it, everything was a little too overvalued. So I think right now it is just correcting, and just really just correction is what's going on, I feel. And especially the tariffs are also affecting the market, and just overall sentiment and fear is kind of having a downward spiral on things. And I do see the market correcting a little bit today, but I am not getting too excited. And that's why I want to go into my next one is I'm hedging my downside risk with covered calls. So since I already own shares of Mara, Riot, and NEO, I am selling calls against my shares to collect premium, and this helps me make passive income when the market is choppy. It is not the best hedge, but it is a hedge itself. For example, I'm selling a covered call on Riot for $9.05 right here, expiring this week. And if Riot does stay below that price, I get to keep the premium, and I also get to do the same trade again. But if Riot does go past that, I can either roll up to another strike price and continue doing this trade, or just take profits, because selling Riot at $9.5 would be a profit because I own Riot at an average cost of 9.22. But either way, Riot is not really in talks to hit that price as of now. And again, another stock where I see this stock trading between $6 and $12 all the time. So it is just on its downward trend. And I don't know how low it will go, but on the regular, it does stay between that $12 and $6 mark. And they're perfect for down or sideways markets, which right now I'm more leaning towards that way. We might see a little bit of a sideways trend for a few days, and then we'll see some kind of action either towards the upside or the downside. And this is perfect for that scenario. Number 3 is dollar cost averaging. This is probably my favorite strategy, and actually all of these strategies are kind of a version of dollar cost averaging, because you can dollar cost average with option trading by doing different strike prices, which I am doing. and different expirations. And DCA is dollar cost averaging. So instead of timing the market, I buy very small amounts every day. For example, I am buying Bitcoin and Ethereum daily at $3 a day. Even though Bitcoin is at 80,000, it was at 70,000 yesterday. I'm still stacking because long term, I do believe in Bitcoin. I do believe we will see that 100K. I don't know if we'll see it this cycle. We're not even sure if this cycle is over, is really what's going on. So I'm not sure if we're going to see the 100K this time around, but if not, that's fine. I get to stack up before it reaches that milestone. And if it does, again, I might take some profits. I will see. When I say take profits, I'm only going to take a little bit and keep my big amount still there, just gathering up, because I look for kind of unusual behavior, and usually when these cryptos shoot up very quickly, it's a good time to take some profits and then just wait how things go. You don't really miss out on much. And DCA is really good. It's also good for emotional. You don't have any emotion attachment. You buy the dip, you buy the highs. Unfortunately, you buy the highs, but you do buy the dips. And over time, it is a winning strategy. And this actually helps lower my average cost over time. So today's pullback, or this week's pullback, might be an overreaction. I'm not too sure, but it could also signal a little bit more of a downside ahead. I know there's a lot of announcements going on, and no matter what happens, I'm going to stick to these three strategies I just went over: selling puts to buy cheap, selling calls for income, and DCA into positions over time, and to build positions over time. Let me know in the comments, are you buying, are you selling, or are you waiting? Drop a like, subscribe, and join my Discord for real-time trade alerts. Until next time,